As an accountant, when you're setting up a new payroll system, things can be a little bit daunting, particularly getting your journal right, getting the right reporting out, and getting end-of-month reporting correct. In this video, we're going to cover all these topics and more to get you comfortable with how to use your payroll system in conjunction with your chart of accounts.
Hi, thanks for joining us. Today we're going to go through KeyPay for accountants. We're going to look specifically at journals and reporting and how you can set up KeyPay to suit your accounting requirements. So as we know, wages expense is usually the biggest item on the P&L. It's usually the biggest expense for most companies, and also it's touching a lot of different areas on the balance sheet. There's a variety of ways in which you can set it up to meet your different needs of your business, and we're going to go through and explore some of those options today. We're also going to look at a few tips for month end, like what happens at month end in terms of being able to reconcile some of these items in your P&L and your balance sheet, and what best practice looks like and what type of reports you can pull to help achieve that. So before we move into the session today, we're going to look at choosing your journal source. We're going to import your chart of accounts, different ways we can do that in bulk, go through a basic setup, and then we're going to show certain pay categories and how we can show certain pay categories up in different expenses in our P&L. We can also do the same thing with department costs. So this is where we might split our P&L up between different expense items based on their cost center. We can quickly talk about leave provisions, how we can achieve movement and leave provisions each pay run. Dimensions, fairly new feature that we'll go through, and useful month-end reports. So about myself, my name's Garth. I'm the founder here at Paycat. I'm actually a chartered accountant and tax agent by trade, so I had a fair bit of time looking at debits and credits in my career, and that was 15 plus years before starting Paycat. Worked for Big Four and some large mid-tier firms. Also had my own little practice called Revolution Business Services, now called Vector Advisory, and I'm still actually a legacy director in that firm, so still dabble in accounting a little bit. So choosing the journal source, that's the first thing we're going to look at. So things to consider here, we're going to have a journal that's going to be produced per pay run. That can be either a text file download or it's going to be a direct download. So things like Xero, QuickBooks, Dynamics Business Central, a few notable items there. You'll be able to directly connect to that file in KeyPay, whereas with other systems, it'll either be a text export or you'll get a generic text export out using Excel. So we're going to go to payroll settings and integrations, which I'll just show you here. I'm just going to go to payroll settings and integrations. And we have our list of options here. So you can actually just filter that by accounting and then choose the system that makes sense. Now, if you don't see your item listed here, Xero and QuickBooks are Business Central are probably the most common ones we come across. But if you don't see your option here, you can choose either file export or detailed file export. In most cases, I would choose detailed file export just because it gives you more context. So I'd click add. Here, I'm just going to remove my old, which I've got set up in a previous demo, and I'm going to click detailed file export here and just click enable. It's asking me if I want to show full location names in the export. I'm just going to leave that off for now, and I'm going to go and set up chart of accounts. So some systems, as I said, require an API connection. So just consider whether you have full access to, say, your Xero file or something like that. Because if you do try to connect from that screen we were on before to Xero, it'll redirect you to log into your Xero file, choose a business, and then it's going to have a direct integration, which is desirable. Now, on a quick note on systems like Xero, where we are connecting directly to a general ledger using the API, usually it's just one business we can connect to at a time. So if, for example, you're using KeyPay and you have multiple ABNs in the same KeyPay business, you might want to consider splitting those if you have different Xero businesses you want to connect to as well. So it is a consideration whether you have one KeyPay file that has multiple ABNs or you have different KeyPay files each with the same ABN. And that's something you can talk to the Paycat team about. Now, I usually go with, as I said, detailed file export if you see something that's not supported. So if you're using something industry specific, like a transports GL or, something in councils or something like that, you can just choose a detailed file export and it'll give you a very generic output that you can usually manipulate with some ease and import the journal into your system. All right, so let's quickly look at importing your chart of accounts. So what you want to do basically is go to your accounting system and pull in your chart of accounts. So most accounting systems have a method of being able to export your chart of accounts. What we're really after, account codes, account names, and what type of account it is too. So we'll have a look at that in a sec. So we're going to actually import ours today from a CSV file. Really want to bring in what we need. So just consider whether you're going to bring in your whole chart of accounts or just the chart of account items that affect payroll. If you are going to condense it, just consider the expense accounts that might be involved in expense reimbursement. So if you were reimbursing your staff's phone bill, you might want to bring in telephone expense or something like that into that list. So we'll have a quick look at that. Here's what I prepared earlier. We've got an account code column. an account name column and an account type column. If you follow that format, so account code, account name, and account type, you can just fill it out yourself. So you could probably manipulate your file to make it look like this. And just a few things to note, we'll go through this in a bit more detail, but you do want to select an account type, which is the singular, asset, liability, expense, revenue, equity, and just select that for each one. And it actually later on gives you a bit of a hint when you're mapping these to what we see in KeyPay. It'll give you a bit of a hint based on what we select here. Have a think about the items that matter. Also, I'll mention this again later, but have a think about whether or not you're able to actually send a general journal to a cash at bank account. A lot of systems restrict that, so you might want to use a clearing account in place of that. And then essentially when you pay your net pay, you code it to, for example, payroll clearing, and it should clear itself out. So what I'm going to do is go File, Download, and CSV. And I'm just going to produce a little journal file import here. And then I'm going to go to Manage Accounts. I'm going to go Import. And then I'm just going to bring that file in, just click and drag it, or I could have selected it from my computer. And it's just going to confirm the upload. I've got my 13 accounts now installed, and now I'm going to click Manage Accounts. And what you'll see here is that everything I've just imported has just come in automatically. So you can export that later and then add new accounts to it if you need to or anything like that and re-import it. It'll just replace what you got in here over the top without affecting your mapping. So that's basically the process of getting your chart of accounts in. Simple enough. We'll just go back to the slides. Let's go through the basic setup of how to set up a chart of accounts. And I'm going to say for probably 3/4 of the people listening, this will probably be the basics of all you need to do and all you need to know. And the rest of it's just adding complexity to granularity and reporting and things like that. So the basics are, you got to go and fill out the top section. So let's go through a few of these concepts here. So I'm going to go to chart of accounts. And what I mean is you got to fill out this default account section. You'll notice here that these are required fields. So once they're filled out, you'll actually have a journal to download. Filling it out is pretty easy. You're basically just going through and choosing an account for the recommended accounts or something else. So here I'm going to use payroll clearing as my payment account and wages expense. At the moment, if you have scenarios where you might have different wages expenses for different scenarios, like here I've got admin and support workers, I'm just going to choose the most common one. So I'm going to choose support workers here. Payroll liability, probably going to be payroll clearing again, actually. Largely it won't be used. It's probably just for, open-ended deductions that don't have a home or anything like that. PAYG, I've got PAYG payable. Super expense, I've got super expense. No surprises. Super liability, super payable. And employee expense is just something generic about where I'd send my generic expense items. I don't really have anything in here terribly relevant. So for now, I'm just going to say salaries and wages support worker as well, but it might be something like staff amenities or something like that. Now you might notice here, we've got a split by location. If I tick that, I'm going to get, even if it doesn't have a cost center attached to it, I'm going to have a different line for every, up to the aggregate of every location that the pay run's been broken down into. So if 3/4 of my pay run's going to support workers and 1/4 is going to admin, I'm going to get 2 lines against support workers, and it's going to have narration on each line to tell me what the breakdown of that is. So just consider, in most cases, I'd suggest ticking that for your expense items. So your wages and your super, because more detail is always better than less detail, and probably employee expenses here as well. So if I save that now, that's basically, that error message is gone. Now I have, if I was to run a pay run now, I'd get a very simple journal that I'd produce. Yeah, so as I mentioned, pick a clearing account or a cash at bank account, just depends on how restrictive your accounting system is there. Exercise caution when coding expenses in deduction categories. It's not always needed. So let's have a quick look at deductions. It's not a requirement to code deductions, but I'd highly recommend it. And what you'll notice is we give you a pretty default list of deductions here. Now, when I'm talking about expenses, by all means, you can code expenses here separately. But what you got to realize is if I code something down here to expenses, it's actually going to take it away from wages expense. And it doesn't always make a hell of a lot of sense. So if your chart of accounts is set up that way, by all means do it. But I'm going to suggest best case is to leave it blank and only deal with the liability. So let's say in a very simple example, I had one employee, I gave him a net pay of $80 and I put $20 to, say, Centrelink. Then my wages expense is still $100, but cash at bank's going to get $80 and Centrelink's going to get $20. So I'm only really dealing with the credit side of that journal, in other words, the liability section. So we can just go through here and specify what we want. So I've got here, in most cases, something called deduction clearing. And then I'm going to use super clearing for super payable, deduction clearing for just about everything else. Now, when we get down to child support, I've got a special one here for child support. Here, child support deductions. So I'll use that one. Then I'll click save. So I would recommend doing expense categories as well. There's always a default expense category in here. You might have more in your file, and I'd recommend just going through and coding them out. So as I said before, you might want to bring in different expense items when you do your import, just to deal with these specific scenarios. You might have a separate travel expenses expense or something like that. I don't in this case, so I'm just going to keep sending that to wages. Not my recommended suggestion. I'd recommend bringing in, separate P&L items for this. But in my fictitious example, we'll just use wages. And just consider whether you split by location. Again, we might have different expenses coded to different locations. So you might want to show them on a separate line on your journal. And I'll click save there. Okay, pay categories for specific expenses. So let's have a look at a typical scenario. I'm an NDIS provider and I do certain shifts called sleepovers. And this is where the employee stays overnight and they actually receive an allowance instead of an hourly rate. Now, I've got a directive from my CFO that requests about this needs to be reported against a separate expense in the chart of accounts. So we can achieve this. So let's just reflect. At the moment, we have all of our wages expenses going to salaries and wages support worker, and everything's going to super expense. Now, what we're talking about here is a very specific pay category that we have called sleepovers. We want to report it separately in our P&L. So this is where I go down to pay categories. Now, a common mistake I see is that people feel tempted to go through every single expense and separately record it. I don't suggest you do that. What you're really doing here is you're only recording expenses that don't meet this rule. In other words, we're going to override anything we put down here. We're going to override that rule up here that says everything goes to support workers. Now, you can by all means go through and do it, but it's just a lot of work and doesn't really achieve much. So I'm going to go down. I'm going to find down to S. It's all in alphabetical order. And I've got sleepover allowance. And what I'm going to do here is I'm going to actually choose sleepover as my expense item. And go down and click save. Now, effectively all I've done is just overridden the situation where if an employee receives a sleepover allowance, they're going to get that part of the journal sent to sleepover expense. It's not going to go to salaries and wages support workers. So I've just overridden that top value. So pay category selection can be selective, so only map what you want to override from the defaults. Now, department costing. So pretty common that you have different parts of the business that you want to show in different parts of the P&L. That's what this is about. So we've got an employee, for example, who are support workers, but we also have some admin staff. So support workers, according to our CFO, need to go to a special cost of sales expense account, and admin staff are going to go to an overhead expense account. So this is how we can achieve this using locations. So let's go to our example here. What I'm going to do is I'm going to use this location-specific accounts, and I'm going to click on Add One Now. When I select my location, I'm looking for something that might reflect a location that we have that is to do with admin. So I don't have one here yet. So let's just quickly go and visit the location screen. And I'm going to add, underneath here, I'm just going to add a new thing called admin. And this will probably be the default location for all of my clerks and probably my executive management, things like that. I'm just going to happy with it being in New South Wales. Everything else I'll leave blank. And when I go back to my chart of accounts, I'm now going to pick on admin specifically. Now what I've got the repeat values of what I've got up here. So I can actually go through and specify what I want to act differently between when it's admin and when it's default. So you might remember up here, I chose wages expense as my default, 1000. Now I actually want admin to go to a code starting with 6. So I'm going to open up default accounts. Again, it's common that I see people try to recreate this whole mapping schedule again. You don't have to do that. You only have to override what you've got. So I'm going to say here that I want this one to go to admin, but everything else is going to stay the same. So I'm not going to go and change anything else. Everything else that it hits, it's going to go back up here and work out what it needs to do. It's only going to be when we hit wages expenses that it's going to send it to admin instead of support workers. So it's a bit of an override. Now, as a quick note with locations, so I'll just go back and revisit locations here. You can see I've got clients. I've got Charles Smith, Mary Contrary, and I've got job 2. Now, what you might notice is it works in a bit of a hierarchy. So Charles Smith is underneath clients, in other words. So clients is a parent, Charles Smith is a child. So what we can do, we can take advantage of that where maybe there's something about the Charles Smith location that I want different to normal clients. So if I just go back to my chart of accounts, if I define what I want to happen with clients and I want something different to happen to Charles Smith, I can have locations specified for clients, come up with a rule of some kind. And then when I get to Charles Smith, and I define this location, it's basically going to override what I've got here for clients. So because Charles Smith is more specific than, say, clients is, it's going to follow this rule first. So this is going to apply before we apply clients. So it actually follows the hierarchy with the location, and the more specific you make it, it'll override the less specific values. In essence, if you hit some sort of situation where no location's been defined, we haven't dealt with anything down here, it'll go back up to the top and apply this rule instead. Or if I hit a location like job 2, I haven't really dealt with job 2 yet, it's just basically going to go up to here to decide how I'm going to send that to my journal. I'm actually going to get rid of that clients one. It was just a fictitious example, just to explain it. And I'll get rid of Charles Smith as well. So this is a pretty common setup that we have. We usually try to split admin up or something like that in the chart of accounts if the client requires it. So just reinforcing, the lowest location on the hierarchy overrides the higher locations. So it's an important concept to get your head around. Basically, the more detailed you go with your location, it's going to supersede anything above it. Okay, leave provisions. So leave provisions are things like provision for annual leave, provision for long service leave. If you're a reporting entity, or a public company, or a charity, an ASX listed company, this might be a requirement. And for other clients out there, they just want to know at any point in time how much they owe in leave on the balance sheet. So they want to record it. So KeyPay potentially will provide a movement in the leave provision in each journal. So that's actually factoring in leave accrued in the pay period, leave taken in the pay period, and if the employee's base rate of pay has gone up as well. So it's factoring in those 3 things into that movement. A few quick tips on this before we show you how to set it up. I'd highly recommend it if you're going to, say debit annual leave expense and credit provision for long service leave as an example, use a different annual leave expense. So it's all too often that people will mix this up with wages expense, and it's hard to reconcile because wages expense now, to reconcile it, you can't just simply look at a report from KeyPay. You need to know the movement between the provisions between last month and this month to get it right. So I'd recommend keeping it separate. In other words, use your wages expense and separately have something called annual leave or movement and annual leave provision or something like that. And that's actually following financial reporting standards as well. Don't be tempted to go into the pay category section and code annual leave taken. It's not the same thing. So there's always a pay category called annual leave taken or long service leave taken. By all means, you can separately report that. But what it's going to show you is when one of your employees takes leave, the value of that expense is going to be coded to that particular chart of account item that you specify. So if you're trying to do a movement in leave provisions, you effectively want the net movement to be your expense and you want your movement on the balance sheet to be the provision. So don't be tempted to go in and sort of double dip and go, I'm going to also go and record annual leave taken. If you're not doing leave provisions and you want to separately report on annual leave taken, by all means go and do that in the pay category section. But if you're planning to do movement leave provisions, don't do that. The other thing I'd say is, things like annual leave, long service leave, make sure you reconcile it on your balance sheet. When we import leave for the first time in KeyPay, we call that opening balances. So you can get those figures from a leave liability report, and it's simply going to be whatever hours we've imported multiplied by the base rate for each employee. That figure as a starting point should be the same figure as what's in your balance sheet when we started. If they're different, they're going to remain different, because we're only picking up the movement in the journal. So if it starts off with the wrong starting point, the wrong opening balance, you're going to have a hard time reconciling it every month. So I'd recommend just spending a bit of time when you're using KeyPay for the first time, just get that opening balance report called leave liability report out of KeyPay and compare the results to what's on your balance sheet. So we'll just demonstrate setting this up. It's pretty straightforward. that's in this leave provision section. So I've got 3 here. I'm only going to use annual leave and long service leave. In this instance, I'm actually going to choose the liability account as my provision for annual leave. Here I'm going to say provision for long service leave. And the expense account, I've got dedicated expense accounts for this. So annual leave expense, long service leave expense. As always, I'm going to split by location. And what contingent period refers to, there's an option with long service leave where there's a contingency period, usually like in New South Wales, it's 5 years, it might be 7 years in your state. And it's when people can, on certain circumstances, be entitled for long service leave. Now, some companies like to accrue it from that point, and other companies like to say, in other words, if I've hit 5 years, all of my accrual all of a sudden gets added to the balance sheet. And the default behavior is just going to accrue it progressively from day one. The long service leave is not doing anything special. It's not doing the accounting standards version of long service leave. So it's not taking into account probability factors. It's not splitting it by current and non-current. It's not discounting cash flows or anything like that. It's just simply doing accrued hours times by hourly rate. So that's what's coming through. So I'm going to click save there. I'm not going to worry about time in lieu, but that's another option. We'd use the same approach effectively. I'm going to click save. So that's how we set up our movement leave provisions to take care of itself. The more we can get self-reconciling, the happier we are. Okay, quick note on dimensions. So this is very, very system specific. We've got systems, notable systems like Business Central, which is the Microsoft Dynamics product, and our generic file export and detailed file export. They're the 3 options at the moment where you can get dimensional reporting. Now, what dimensional reporting is for is where you might want to report in your accounting system wages on different, I'm going to use the word dimensions, but basically different reporting categories. So in my example, show me wages expenses by both department and by function. So maybe I was in marketing and I am also involved in delivery, that kind of thing. So they're separate, they're mutually exclusive. So it doesn't really suit our location hierarchy as much. It's more about, usually use this for, maybe reporting to cost centers or something like that. Xero has the idea of tracking categories. This is similar in approach. So with our journal export options, we have 2 dimensions available that journal can be broken down by these dimension codes. So this is a good technique for getting your cost center reporting and that sort of thing on point if that's something that your accounting system needs. So the way we set those up, it's actually outside of this screen. There's a dedicated screen for dimensions. If you're reporting to something like Dynamics, you can actually import dimensions in a very similar way to what we did with journals, or you can manually add them in the pay run as well. So basically, I might call my first one department, and underneath department, I can create my values. So I can say, one department I've got is admin, and the next one I've got is marketing. Et cetera, et cetera. And what we can do, there's 2 options. I can get my employees on their timesheet to specify what dimension they're in. I can add other dimensions as well. So let's say it's area. Here I can add things like Newcastle and Sydney. Things like that. So I can add as many dimensions as I like. I've got area and department now. And if I go to my employee, so I go to John, and I go to pay run defaults, I can stipulate his primary dimension, a bit like a primary location if you're used to that concept. So he's always in Newcastle and he's always doing admin. So that's the type of thing I can specify. As I said as well, it is available as a fairly new feature to be able to add that to the timesheet. So John can tell us, maybe what project he was working on or what job he was working on or something like that on the timesheet as well. So that's how that comes through, and that'll appear on your journal export as well. Month-end reporting. So what we might do before we just tackle month-end reporting, we might actually go through the process of producing a pay run, and we'll download a journal and have a look. So we'll go to a pay run I've already created. And you can see here I've got a sleepover allowance in here, so we'll be able to see that going to a different pay category. I'm also just going to go, because we're only using location SCHADS template here, I might actually just change one of those to be Actually, I'll just change John so that he's got more locations to choose. I'm just going to give him access to admin as well. And then I'm going to go back here, hit refresh. And I'm just going to change this location at the top here to admin. So in other words, there was $161 of the week spent on admin, and the rest of the week, we should see that going to support workers and a separate item going to sleepovers based on what we've gone through so far. There's also a whole bunch of leave that he took, so there should be a bit of a movement in leave provision that we should see as well. I'll just click save there. So I'm going to finalize that pay run, which is going to send the pay slips out, but more importantly, we're going to get the option to now download our journal. So here it is. I can download my journal. And we'll just quickly bring that into this empty spreadsheet that I have, and we can have a look at what that looks like. All right, so this is what we get. Basically, we're getting a list of debits and credits. We're getting the name of the location that it's come from. So remember we said, for example, split by location. So we're getting separate lines for super expense for the two different locations. We've got that line coming through separately for salaries and wages admin. So that was that location where he'd worked. There's also salaries and wages support workers. That is basically the balance of what he's earned. We've got a bit of a movement in annual leave expense and provision for annual leave as well. So this is the net effect of his leave provision going up. He's net accrued $22.86 for that period. And the payroll clearing is what John would have received for his net pay, more or less, and $232 tax withheld. So that's sort of achieving everything we need. This is the generic format. So as I said, this is something that you can actually manipulate if you like and get that, shaped in a way that your accounting system can connect. And then from there, usually you can do an import or build a macro or do something really clever to get that journal in. Now, these two columns here, they haven't come through with any value. And the reason for that is because I actually assigned John the dimension value after this pay run was run. If I was to do a new pay run for John from this week, it should show dimensional reporting in there. But, you got to take into account that when you make changes, you're making changes after the pay run. So it's not going to go back and retroactively apply those. For that reason, it's a really good idea to get your dimensions sorted before your first pay run, if it is a tool you're going to use. It's pretty manual to do it after that. Cool. So month-end reporting. I've just given you a list of ideas, I guess. Like these are things that I've come across that I believe are good reports to start with. So we'll just go through a few of those. The first thing to know about reports is paid date is usually the date that matters. So it's not so much period end date in most cases, it's paid date. So if I was to put a date range in a report, it's going to show me how many pay runs we paid between the start and the end date that fall between those two dates. So as an example, because I'm looking at February 2023, if I was to run a super contributions report, go back to February, from the 1st of February through to the 28th of February, and click apply, it's going to pick up the results of that pay run in there. Now, all of the reports that you see, they can download to Excel or PDF. This report in particular has a whole bunch of different options for different clearinghouse facilities, or you might actually use the Beam clearinghouse facility, and you can find that if I go to reports and super payments. You can register that if you haven't already, and there's an attached super clearinghouse facility associated with KeyPay called Beam. And I'd recommend that. It's actually a really efficient way of running your payroll and your super. Just to go back to a few other reports that I'd look at, I'd recommend leave liability. We touched on this a little bit earlier, but leave liability gives you the dollar value of your leave, basically your provision for leave. So I said, as at today, I want to understand what my long service leave figure is. And I click run that report. It'll give me for each employee what their long service leave figure is. Might look at that for annual leave, might be more meaningful. So it just generates that report. That's something you can use to actually go back to your balance sheet and decide, okay, well, I'm going to compare this result to the result on my balance sheet and make sure I'm picking up the right value. So in other words, I should have $56 of leave on my balance sheet at the moment. Gross to net, really good report. What gross to net is, I think it's sort of my go-to report for everything just about. What it will do, if you pick a month, I'll actually just pick the month of February. I think we'll go back and look at that for context. So if we go to the 1st of Feb and the 28th of Feb and click apply, I can decide how I group it, like by what location or, employee default location or whatever the case might be. Do I include expenses, what pay categories, what pay schedules, etc. When you run it, what it does, it basically tells the story of what's happening in the pay run. So for this pay run, John got 27 hours. He got a bit of first aid, a bit of laundry, a bit of night shift, etc. So it's breaking out the gross earnings that way to come up with total gross. Some of that's exempt. Let's say probably the travel is exempt or something like that, kilometres. The laundry. Therefore, this amount is taxable. And then we go pre-tax deductions and tax withheld, net, bank, etc. Now, a lot of people we deal with, to me, it's not so much a requirement, but a lot of clients like to reconcile their SCP pay events in the ATO portal with something from KeyPay. This would be the report I'd recommend to do that exercise because it's giving you enough granularity to be able to do it. So the things that are exempt that we don't report on won't be like, you'll be able to take the total and deduct those items and you'll be able to compare, what we've paid in KeyPay to what we've reported for SDP. The next one is payroll tax. If you're an employer of a certain size, you'll have to pay payroll tax in Australia. And while we don't have a report that tells you the liability, we do have a report that will give you basically a summary breakdown of what happened in each state. So at the moment, I'm only working in one state, so it's only showing me New South Wales. But if I was multi-state, it is showing me different states. It also separately pulls out any exempt employees or any exempt pay categories that we have that we're going to say isn't applicable for long service leave purposes. So it gives you enough to go and do your monthly calculator. The thing I'll mention, a bit of a limitation on this, you can decide basically whether, I won't talk about roll-up location, but you can decide between default location and earnings location. Now, this would be, for example, the location I belong to, and this is where I worked. So I would normally recommend doing this. The state that it uses will be based on this. So it's usually the same as where I live. Now, I don't have anything that's like a residential state or anything like that. So it's just one thing to consider if you're worried about the nexus provisions of long service leave, like what state is my long service leave liable in? I'd probably in most cases go employee default, but it is a little bit simplistic in that regard. So if you have detailed grouping or anything like that, there might be a bit of work to do outside of this sheet to sort of get that calculation. But this sort of gives, for most of our clients, this gives us the values that we need, broken down by state, and then the total for, total Australian wage reporting. And report packs. Now, report packs are going to be your best friend. What a report pack is, let's go back to reports. A report pack saves you having to go into the system and downloading these things at the same time every month. If I had some sort of report pack for my CFO that I wanted to produce to do with month end, I could click add and I'll call it my CFO report pack. And the period's going to be, say, last month, and it's going to produce itself monthly on the first day of the month at 9 a.m. And what we can do, we can actually pick the reports we want. So say, go back to my gross net report. I get the same filtering options as what I get when I run the report. How do I want that to be shown? What are the different, presentation items and filtering and all that sort of thing that I want? And I can keep adding more. So I can go and do my payroll tax report as well. There's a PAYG report in there, which would be useful. And super, and on we go. Okay, so it's a really, really useful report. Now, what I do from here is I can add a recipient, and I can just put my email in here. And to my inbox on the 1st at 9 a.m, I'm going to receive a zip file, and that zip file is going to contain all these reports. And this might kick the process off for dealing with your month-end reconciliations, lodging your payroll tax, lodging your BAS, all that sort of thing. You can customize the message that comes with that email, but it's a really useful thing. You can restrict what locations they see. So if this is going out to department heads or something, just pick the department that matters to them, which is really useful as well. And this is a set and forget thing. So once you get the hang of the reports that you're going to use, come up with your wish list and go and build yourself a report pack. So next steps, if you've been following along, I would just work with your customer success manager at PayCat to achieve the desired journal output. So it's something worth looking at, particularly when you're in your testing stages, to go and have a look at an example journal and what it might look like. And then don't get too caught up on the numbers per se being the same, but the structure of it. So is it providing enough granularity, enough detail based on your requirements? Review locations. So locations matter in terms of, how much or how little you want to report your wages, expense and super and things like that. So consider what your location structure needs to look like early on to basically suit the needs of your journal. So if we need to, for example, report on different departments in different spots in your P&L, you might need to consider that, your pay run needs to be broken up by department. So you use locations for that. Go and set up a month-end report pack. So give it a go. Have a look at some of the reports that are available. What you might notice if you're a new user is some of those reports will be empty unless we have a finalized pay run in there. So most of the reports don't work unless there's a finalized pay run. But once you get the hang of, got some data in there, you get the hang of what you like, I'd certainly recommend doing a report pack. And you can also do a payday report pack. So what that is, it's something we can set to run. So it's the same concept, but what a payday report pack is basically what do we want to receive every time there's a pay run. So I might want to receive a set of pay slips, maybe a pay run audit report, maybe a payment file report. And I'm just going to add to that, of course, subject of the day is a journal report as well. So my export format will be Excel. It'll be the current pay run and all pay schedules that applies to it. So what that does, same sort of idea, as soon as you'll finalize your pay run, you're going to get sent to a nominated email address a zip file with these 4 reports in there. You can add the ABA file in there as well, what we call a payment file. You can add the journal and, a variance report, whatever you need to look at. So that's all available in there. So that's definitely a worthwhile exercise as well. Basically, to see that function, you go to your pay schedule. You don't necessarily need to assign who gets that. You go to your pay schedule and there's an option here about, hey, what happens when we finalize this pay run or this pay schedule? So what you can do here is you can click here and say, I want to run my payday report pack straight away as soon as it's finished. And that just makes sure that you get the file sent to your inbox that you need, which is handy as well. So that helps you very efficiently upload the payment file, the ABA file, and upload the journal to your accounting system, and you've got everything you need in your inbox. That brings us to an end on how journals work. I'd encourage you to go and have a look at how it's being configured and run a few journals and have a look at a few examples, as we said. And don't be afraid to pass any feedback on. If there's something not working and you think you want to look a little bit different or a bit more granular, our team are really good at advising on how to achieve that. So thank you very much for that. I hope you get a lot out of using KeyPay as an accountant. It's a really, really useful tool for payroll, but it's equally useful for accountants in terms of reporting and analysis. So I hope you get a lot out of it. I hope you enjoy the seamless process of reconciling some of your items on your balance sheet, your P&L, using some of the techniques we looked at. And, if it's set up properly, it's a self-reconciling thing. So, one more job done. So appreciate your time here today. Hope you enjoyed the session, and I'll talk to you real soon.